Welcome to Investors Insights. Our topic today is higher, ? Rates, earnings, or markets? The word higher continues to be in the questions being asked by our clients. Can the market go higher? Will interest rates go higher? Can corporate earnings go higher? We're going to address those questions in today's Portfolio Strategies vlog with you. And in addition to that, follow us throughout the week and track our vlogs. It's our commitment to you for our high-tech, high-touch strategy to communicate with you on an ongoing basis. Last week, we did an educational vlog on our democratized family office here at Five Plan Partners. And this week on Thursday, we're going to release a technology vlog talking about how we're using technology to communicate with our clients. With that said, let's address these questions about the word higher. And starting off, I'm going to ask my distinguished colleagues who have just gotten out of a meeting with me, having great debate and discussion, Bobby Norman, Trey Booth, and Adam Van Zant to join me. Gentlemen, welcome. Appreciate all your hard work and insight. Bobby, you started our meeting off this morning regarding just interest rates and what takes place and the impact on the markets, the impact it could have on our clients' portfolios. So take it from here.
Yeah, Greg, I want to talk about a topic that has been the suspect in the recent market volatility, and that is higher interest rates. And so with the 10-year yield pushing 1.4%, we want to do some research into how rising rates have historically impacted the markets. And so as you can see in this chart, going back to 1990, we looked at 7 time periods of rising rates and the impact on the market. And in these periods of rising rates, the S&P 500 was actually up all 7 times. No guarantees, but we do note that rising rates could impact certain sectors like housing and real estate, but doesn't necessarily mean the market will be down. And so higher volatility, yes, but not necessarily a market being down. And the worry behind rising rates impacting the market is due to the belief that there will be an outflow of equities into fixed income now that there's better return potential with higher rates. It's something we'll be watching carefully over the next couple of weeks and months as rates are expected to climb higher as the economy reopens, comes back, and more stimulus is passed out.
Well, and that's great insight, and I really appreciate in the meeting you bringing it up. And Trey, you interjected that, okay, so rates go up, but what's the impact if corporate earnings go higher? Talk about that.
Yeah, that's right. The negative impact of higher rates could be limited if earnings can grow at a faster pace so that markets remain cheap relative to the opposite end, which would be fixed income investments. So earnings in the fourth quarter actually came in, as we've talked several times, much better than expected. Going into January 1st, it was expected the fourth quarter of S&P 500 earnings would be negative 10.3%. As it stands now, it's looking like earnings were going to actually grow by 3.7%. This surprise to the upside, if continued into the first quarter, could make the negative impact of higher rates reduced by the fact that the market is getting cheaper by companies just doing better. And so if these companies' earnings can continue to improve at a pace faster than interest rates go up, then the market can remain cheap on a relative basis and can remain strong. So that handoff from a stimulus-driven stock market we've had over the last year with a lot of federal stimulus from the Reserve and from Congress, the handoff to a regular functioning economy driven by earnings and GDP growth, that handoff hopefully will be happening sooner than later so that we can have a more prolonged and sustainable growth pattern in the markets, even with or without higher interest rates.
Great insight on that. And so, in addressing the question, higher ? We've addressed interest rates, we've addressed earnings, and Adam Van Zant, talk to us about the markets. You keep up with the technical analysis. Tell us where we are now as people keep going. Can this market go higher?
Thanks, Greg. And yeah, to your point, so Friday's close came in on the S&P 500 at 3,906. That pushes a new resistance level to 3,970 and a new support level of 3,800. So often also we talk about technicals and fundamental analysis. So, this is one of these case in points where they do complement each other. I did want to point out that retail sales went up for January at 5.3%. Expectations were at 1.2%. So that's a large gap. We want to look at that from a moving day average on the technical side. So we look at short term and intermediate term to see if the markets are already priced this in or if earnings come out in the future, if this is going to change the dynamic of the markets.
Well, you're absolutely right. That's been the puzzle, or the other question mark, is that as we've answered the question, higher, is there room for the market to go higher? Can interest rates go up? How can earnings continue to grow? Simultaneously, we're seeing business models change throughout this economy, retail being one of them. And here you are talking about retail sales being up, and yet so much online retail sales has taken place while we watch some of the old business models going out of business or having to reconfigure how they interact with the client. Great insight there, Adam. Thank you for doing that. With that said, we hope you enjoy this information and find it very valuable. We're going to continue to send information like this using technology, these virtual meetings, these vlogs, to keep you updated. We also are doing virtual meetings, speaking to organizations, speaking to groups. If you have someone for us that we can talk to as well. And also from the standpoint talking about my book, Better, Richer, Fuller, in which we talk about things people need to be discussing, the questions they need to be asking in regard to their financial blueprint. And here at Five Plan Partners, we manage the portfolios to the financial blueprints. And that's important to us. We want you to have a great week. Continue to follow us on social media. We're celebrating our 16th year and thrilled about that. And Felicia Ludlam here at Five Plan Partners has done an incredible job posting our history and pictures of our organization as we've all evolved and as we have grown here at Five Plan Partners. And guess what? We couldn't do it without you, our clients. And we thank you for the belief and the trust and confidence you have put into us, as well as the fact that you continue to forward these vlogs, our social media, and make introductions for us here. Thank you so much. We want you to continue having a great February. We'll keep you updated and hope you have a great week. Talk soon.